First of all, thanks very much for joining me, guys. It's a bit unusual for us to do webinars at 2 o'clock in the afternoon, but that's not the most unusual thing that's happening right now, because I guess most of you are at home instead of at work, and that's why normally we do our webinars at about 7 o'clock at night. Firstly, and most importantly, I hope you're joining me and you're safe and well. I hope you're taking care of yourselves and you're following all the advice, whichever country you're in, whatever your government is telling you to do. I'm sure that they've got the best intentions of everybody in their plans. So I hope you're following that advice. And firstly, taking care of yourself, because if there's no you, then obviously there's no business to then go and take care of. Obviously, taking that one step further. If you are safe, healthy, and well, then a lot of your concern is going to be about your business right now, because we face very, very, very unusual circumstances. Now, something that I keep seeing is that people are very concerned about the longevity of coronavirus and how the effective lockdown is going to affect their business over a long period of time. And that's totally understandable. You know, the market has already, the property market I'm talking about now, has completely slowed down. Although saying that, we at Sourced exchanged on 2 properties yesterday, and we agreed a sale on another property last week. So there is still activity in the market. And I think a lot of what's happened is that the market has changed very, very quickly, and therefore people have not been able to adjust as quickly or as well as they previously would have, because it usually markets change over a long period of time. There's not usually this short, sharp shock that we're seeing now. And that really tests how flexible you are as an individual on running your property business, and also how flexible you've built your business, how quickly your business can respond to something like this happening. So it's a real test of your business right now. And I just wanted to dive into some of the things that we've done at Sourced, some of the ways that we're helping our franchisees, and actually some of the ways that you should be looking at this right now, because I think a lot of the issues that people are causing for themselves in running their business is a lack of changing their perspective on what is happening. So let's dive into that right now. So first of all, a little bit about me. That's me. I'm going to be completely honest with you. I've been working at home for a week now. I don't quite look as polished as the picture would suggest. But I'm definitely not going to turn the webcam on so you can see me. That would be a terrible idea. But I am working from home, and we at Sourced have been working from home for a while now. I've founded, grown and run multiple businesses in a few different business sectors. And I've been involved in property for about 10 years now, going from the smallest property purchase that I did was £55,000 to the largest property deal that I'm involved in, which has got a GDV of £150 million. Executed many different property strategies on my own and by advising other people as well. On my own, obviously, I was doing that to build my own portfolio, and with other people, I've been helping them build their portfolios over quite a long period of time. So now what I do at Sourced is I assist the franchisees. So I'm their point of contact when we're talking about anything property or anything about growing their business. So they come to me with property projects, I assess them, I go through them with the franchisee, and we look for ways in order to either maximize that, because sometimes they haven't quite maximized the opportunity that is presented in front of them, or potentially we look at different projects instead, because it might not fit in with their goals and what they're trying to achieve over the longer period of time, which is the most important thing that they need to take into consideration when they're building their business. So that's our website. That's us at Sourced. You've probably seen it already. And there's another picture of me on the right-hand side in the franchise banner. This is our website. These are all the different parts of property that we're into. So we're looking at care, we're looking at developments, and we're also funding property. So we've got our fingers in a lot of pies when it comes to property. And we've been doing this for a long period of time. And so I'm basically trying to show you why we are the people to listen to when it comes to running your business. So Source was launched in January 2017. It was in its conception, sort of in its ideas phase at that point. And then the franchise model was launched in September of the same year. That was the first thing that was launched out of those 5 business sectors that you just saw on our website. The first thing that was launched was the franchise. And by February 2018, so just a few short months later, we hit 20 franchisees, and that just goes to show the demand or the interest that there was in not only learning about property but also having support in property, and that's where we differ from a lot of companies that are out there. August 2018, we received FCA approval, so we have approval in order to run our peer-to-peer capital side of our business. And while we were building that business in the background, we had the franchise arm of the business was growing very, very strongly. So Capital was launched in November 2018. We bought a development worth £150 million in February 2019, and Source were approved for ISA and pension funding in March 2019. Source Care was launched in September 2019, and by February 2020, Source hit 70 franchisees. So that's where we currently are. And the last time this slide was put together was February 2020. And who'd have thought that I'd have been working from home for a week when it comes to the end of March? How things have turned around very, very quickly. So sustaining a property business in uncertain times. I think the uncertain times bit is a bit of an understatement at the moment. I don't think anybody's really seen situations like this, and certainly happening so quickly as they have in the last couple of weeks or so. So let's have a bit of an overview in the property sector, and then we'll dive a little bit more deeply into what you can do, how you should be looking at it, and how it can help you. So in property, obviously, you've got a lot of flexibility. If somebody says that they're in property, there are so many different niches and rabbit holes that you can go down in property, that just saying you're in property doesn't really cover all the possibility that you have. So that's an advantage, obviously, for you. That's something that you should be taking advantage of, because if you're in property, it's not as if you're just a retailer of a certain thing and you're known for selling that one thing. You're kind of a lot more stuck at that point if you're selling one item. However, in property, the amount of people that you will have met, the amount of people that you'll have in your network will have their fingers in multiple different pies throughout the property sector. So if you're looking to pivot your business, if you're looking to go in a slightly different direction, that's a lot easier in property than it is in a lot of different business sectors. So now in a previous webinar that we've done, I've shown the strategies that you can use in order to get started in property. And there are 5 fast cash flowing strategies that we were recommending to follow when you're first getting started in property. Now that's when you're first starting, that's without any money, that's cash flow cash flow from the very off of starting your business. If you've been in business for a while and you've already started to generate that cash flow, how can you then change your business in order to keep on trading, keep on going when conditions get tough? So what do most people do when they come into the property industry? Well, most people, when they come into the property industry, have an idea for something that they want to focus on, and they establish themselves in one area, and they sort of forget about all the other opportunity that's out there at the same time. You'll either get somebody that's doing that and they will focus solely on something like, let's say for argument's sake, title splits or commercial conversions. They'll focus solely on that, and they'll sort of forget about everything else that's happening. Now that's okay while it lasts. However, we're seeing in conditions like we've got today, that might be an issue. You're putting all your eggs in that one basket, whereas having side projects, having other things that you're doing as well as your main strategy is definitely a very good idea, and it creates a safety net for you. So what's right for you? There are lots of different avenues that you can go down, but the right strategy takes into consideration a lot of factors, of which these are 4. So the market conditions, the lending conditions, the personal situation, and your financial situation. These are, let me just have a look quickly into the, let me just have a look. I'm just quickly looking into the chat because there seems to be quite a lot of questions, and I'm just going to try and make sure that I'm getting them all. Okay, let's just make sure that I'm sharing the screen. There we go. I've started sharing the screen, guys. Can you see that now? If you just give me an answer, that would be fantastic. Yeah, got it. Okay, great. So I'll just quickly go back through the slides that I've just shown you, just to, there isn't a huge amount of information that we're going to cover in those slides. So that was the first one about sourced. In the property sector, that was just written down what I was looking at. And let's just have a quick. There we go. Seems like that's working now. Okay, great. Okay, that was the second slide that I showed, and then moving on. We were looking at what's right for me. So there we go. We've got the four conditions that I was talking about: the market conditions, the lending conditions, the personal situation, and the financial situation. Now I'm going to go into detail a little bit later on about how these break down and what the different relevant factors from these four are. However, they can be summed up as a combination of those four things. So a combination of the market, the lending, your personal situation, and the financial situation will lead you down a path of what is the right strategy for you to use in property. So example, there we've got Nadia in the image on the right hand side, and all of those factors combined showed Nadia that the best thing that she could get into was assisted sales. So when she first started, she started in February last year, and she very quickly, within a month, secured her first assisted sale. And what she did with that assisted sale, she worked with the property owner, and she generated £60,000 worth of profit by not putting any of her own money in. And the way that she didn't put any of her own money in was she introduced an investor to help her out with that deal. So let's have a quick look at what's happened over the last couple of weeks. So over the last couple of weeks, the market conditions have changed markedly. So there's been a lot of change. There's been a lot of change since the coronavirus pandemic hit. Mainly, the market has completely slowed down, and the market has gone from being a seller's market, which in the UK, and we are going to talk predominantly about the UK right now. The UK has been a seller's market for years now. I'll go into exactly what I mean by a seller's market, but very, very quickly it's turned from being a seller's market into a buyer's market. The conditions, who's got the power, who can negotiate harder, and who's basically in control of a negotiation has changed within a period of a couple of weeks. Now, I'll show you how that then affects lending, because when it then comes to lending, theoretically, it's easier to find property opportunities. And if it's easier to find property opportunities, lending gets tougher. And what I mean by tougher is it can become more expensive, or the conditions in which you can get lending become more stringent. For example, on a buy-to-let, you might not get a 75% loan to value anymore. You might need to have a 60% loan to value, which means that you need a 40% deposit instead of a 25% deposit. A much easier way of understanding that as well is lending might just be more expensive, because there are more opportunities out there and fewer people doing it, and therefore lenders want to cherry pick the best people, or the people where there is less risk for them to then lend money in order to get into a property deal. Your personal situation might have changed. Obviously, we've got a lot of people who are being put on furlough, and I've got to admit, I was one of those people that didn't know what that meant 2 weeks ago. However, furlough is affecting a lot of companies. A lot of people, a lot of self-employed people are being laid off. There is a lot of change in people's personal situation. So again, that might really affect what you're focusing on with your property business. And obviously, if your personal situation changes, your financial situation changes. So out of those four categories of what might have changed in the last couple of weeks, all four of them might have changed, and also might have changed significantly in the last couple of weeks. Now, this is an example of a seller's market. It's a bright and cheery slide where on the left-hand side, you can see the houses available. On the right-hand side, you can see the number of people in the market. So there are fewer sellers than there are buyers, which means that the sellers hold the power of that negotiation, right? The sellers know that if somebody makes an offer for their property and they don't like that offer, they can reject that offer and they can just wait for somebody else to come along, because it won't take long for them to sell their house, because there are loads and loads and loads of buyers out there. Does that make sense? So that's a seller's market. It's a better market for sellers, in which there are fewer properties than there are buyers. And then obviously turning that round, there are in a buyer's market, there are more properties than there are buyers, and therefore the control of that negotiation completely flips on its head, where the buyer is completely in control, because the buyer knows, if they can't get the deal that they want out of that property, they'll just wait, they'll find another property, because there are loads of properties on the market, and therefore the buyers have got the control. So a seller's market, the sellers have control, they have more power in the negotiation, as there are lots of buyers out there. And in a seller's market, what tends to happen then is prices go up, because there are more buyers out there. The seller can keep driving the price up until they find the buyer who is going to take the property at that price. So you tend to find that prices go up, and they're less likely to negotiate terms, like on exchange. If you want to add any additional terms into the exchange or make an exchange subject to, again, the seller is less likely to accept those terms, because they know that they can reject the terms and they can just wait for another buyer to come along, because there are loads and loads of buyers out there. So what that means for the buyers is it's harder to find good margins on places like portals. I'm not saying it's impossible, because we've made a lot of money out of finding properties on portals over the last few years. However, it is harder to find good margins on the portals. If you're just going onto a portal like Rightmove and you're just scrolling through hoping to find something that's got a good margin, it's going to be much more difficult. You need to be much more disciplined, and you need to be far more savvy with how to use something like Rightmove in order to get you the property deals that you're looking for. So then lenders make borrowing easier, which tends to happen in a seller's market. Now, moving over to a buyer's market. In a buyer's market, the buyers have control, which means that they have more power in negotiation, as there are lots of sellers. Now, what happens there is that prices go down. So there are more buyers than there are sellers. So there are fewer buyers than there are sellers. So there's loads of properties on the market, which means that the properties have got to compete for the buyers, which tends to mean that people have got to drag their prices down in order to get their house sold. Sorry, I just confused myself for a second there. It also means that the sellers, who are more likely, are going to be more likely to negotiate terms, because they've got to compete. They're the ones that have got a lot of competition in the market. So they're much more likely to exchange subject to something, or put conditions in the exchange of contracts. Now, that's a really important thing that we're going to come to in a little while. We're going to cover that, because that's where the current situation gives you an advantage and gives you opportunity. So there are more properties on the market, there are fewer people snapping them up, and therefore it's easier to find properties on portals. And then lending becomes more difficult, as there are more properties on the market than there are people buying them, which is exactly the conditions that we find ourselves in. So over the last couple of weeks, all of those things have changed, right, as we discussed. So where's the opportunity? Because if you look at those two slides, you might think that, well, the seller's market, when there's loads and loads of buyers out there and there's hardly any sellers, surely there's no opportunity there, because the sellers, the people that own the property, they're so in control of everything, and there are so many buyers in the market that it's really tough to find opportunity, and therefore it must be really tough to grow a property business. Well, guess what? If you've been in property for the last couple of years, that's exactly the situation that you find yourself in, that you have found yourself in. And if you've made a success of that, then kudos to you, fantastic, congratulations. That's a much tougher market to operate in than we are currently operating in right now. Now, what you'll have done is you'll have set up your property business to to operate in a seller's market. Now, you might not have objectively thought about it in that way. You might not have taken that high level overview and made that assumption. However, that's exactly what you've done. And in the seller's market, for me, and for when I recommend things that people can do in order to grow their property business, I'll have put much more emphasis on network and community, in growing your network, in not just relying on estate agents, but going to networking events, talking to solicitors, talking to surveyors, trying to get property leads from sort of unconventional sources. So not only relying on Rightmove and not only relying on estate agents, but looking at other ways to generate off-market leads. So you might have had a stack of leaflets in your car, and as soon as you see a property that's really not taken care of and it looks like nobody's living there, you pop that leaflet through the property, you make a note of the address, you go home, you look up who owns it on the land registry, and you write a letter to them. Stuff like that might have been part of your game plan for the last few years. However, based on the slides that we've just been through, in a buyer's market, there's opportunity everywhere, right? You don't need to print those leaflets off and go to that expense, because you will find opportunity on the on portals. So when you look at it like that and you look objectively, people in property have been panicking for the last couple of weeks because everything's changed. And yeah, okay, everything has changed. However, it's changed in your favor. We've seen lots of our franchisees, and like I told you earlier, we've got 70 franchisees throughout the country. We've seen lots of our franchisees be contacted from estate agents who are saying, you offered on a property 6 months ago, that property deal never went through, and actually it's just come back onto the market because the sale fell through completely. Are you interested in this? And we're seeing this regularly from lots of our franchisees who had inquired about property previously. And the reason is the people that are involved in that deal, the buyer involved in that deal, is worrying that the current market situation has changed. Now, what that can mean for them is the lending that they have access to might have said, we will lend you on that property. However, the lending criteria are different now because the market is different now. And therefore, that might have thrown that deal out of the water, and they have to back off from that deal. Now, people are panicking because they're not able to adjust to that situation. I'm just looking at 211. I'm just checking I'm just going to quickly check the chat. Okay, I've still got 22 minutes past. I've still got somebody saying they can't see the slides, but I've got other people saying they can see the slides. So if you would just go into the chat box, would you be able to just let me know if you can or can't see the slides right now? And I'll deal with it if I need to. But I've got sort of differing feedback. Can see, yes, brilliant. We can see all the slides. Okay, brilliant. Thank you for letting me know. Cheers. Okay, so getting back to the point, why are so many people panicking? People are panicking because they're not adjusting. That's simply it. Looking objectively at a seller's market and a buyer's market, which one would you choose? You would choose a buyer's market, wouldn't you? Because you can see opportunity everywhere. So if you can see opportunity everywhere, then which is where we are right now, all you've got to do is look at your systems, look at your processes, look at the way that your business is set up, and then turn it round in order to become part of that buyer's market and streamline yourself to be in that buyer's market. So just as I said, and that's a good point. They're reacting emotionally to the situation. If you watch the news, if you're keeping abreast of like BBC News, CNN, Sky News, whatever you watch, it is very difficult to not react emotionally to the information that they're giving you, because that's what they do. They get you to react emotionally so that you go back and you continue to watch because you feel like you need to know that information, which is fair enough. However, that doesn't serve you in your business. In your business, you need to be making sensible, objective decisions. So step back, think objectively, review the situation, and create a solution. So let's have a look at how you would do that now. So if you were in a seller's market where the sellers have control, they've got more negotiation, more power in negotiation, so on and so forth, the stuff that we talked about before. The setup was probably to automate checks on portals, regular visits to agents, time spent building the network, and then some D2V, direct to vendor stuff in the background. So that's probably the setup for a seller's market. For a buyer's market, where we've just talked about prices go down, it's more likely to negotiate terms. You're just talking to agents. You're talking to every single agent that you can right now. And yet that's a little bit more difficult for you in the current situation, because agents are just on the phone. Some agents are working on a skeleton staff. Obviously, agents aren't going out and doing viewings unless you're doing video viewings, but it's much more difficult to get out there and talk to agents. However, you want to be on the phone all the time, making contact with agents. Remember that slide, the colorful slide where there were more houses on the slide on the left-hand side than there were buyers? So if you think about the day in the life of the agent, that agent is going to be, having 30, 40, 50 calls in the day. And most of them are going to be people saying, I want to sell my property. Why are you not selling my property? I need to get this property sold. It needs to be sold in a few months' time. And the number of buyers that are contacting that agent will have reduced drastically over the last couple of weeks. Imagine how grateful they will seem to you in order for you to give them a call and say, listen, I'm in the market, I've got access to funds, and I want to buy. So let's have a look at some properties. They're going to be more likely to want to speak to you now than they were 2, 3, 4 weeks ago. Now is the time that you can make a real impression on these agents by calling them up, getting all your ducks in a row first of all, making sure that you know what the lending terms are, you know that you've got what you need in order to execute on a property deal, and then call the agents and tell them that you're in the place to buy and you're looking for something, and then tell them the criteria that you're looking for. So you'd still be using portals. However, your first port of call has to be the agents, because they're the ones now that are going to be much more keen to work with you. Now, like it says at the bottom, you need to contact your broker and understand what lending is available to you. If you contacted your broker about a month ago, the lending might have changed completely. So it's important that you stay on top of that, the lending market conditions, as well as the property market conditions, because the combination of those factors will tell you what your opportunity is. And then be consistent, because, like everything, especially in property, people will come into the market for, a month, 2 months. They'll say that they're the next big thing. They'll try and make an impression for themselves. They'll realize by the end of those 2 months, they'll realize that actually it's a longer slog than they'd anticipated, and therefore they just pull out. They give up. They pull out. They go and try some other sort of get rich quick scheme or something else that they think they can execute in a couple of months. It doesn't work that way. If you're genuinely building up a network, if you're genuinely looking for lifetime value, you need to be consistent over the long period of time. Now, if you build up relationships right now over this period with estate agents, let's say that the market does revert back to being a seller's market, which, in time, 100% it will. Absolutely it will. But again, you've got a longer relationship with those estate agents at that point. And therefore, you've already built your relationship with them, and they're much more likely to continue to work with you. So now is a real opportunity to make a name for yourself with estate agents. So specific tips, I mean, obviously you've got the price, and the price that you can offer, again, should be a combination of the market factors and the lending criteria. But don't be afraid to negotiate on price right now, because there are people out there that are much more likely to negotiate on price, because there are fewer buyers, and therefore they know if they don't accept an offer from you, then it might be a period of 3, 4, 5, 6 months before they get the next offer. So specific tips, obviously negotiate hard, and harder than you would have before, on price. Now, exchanging contracts. This is a really good specific tip that I don't think many people have been talking about, and I think is something that you should absolutely be using right now. So it's obviously in the seller's interest to exchange contracts, because at that point they know that their property is going to be sold. Now, if you're going to exchange contracts right now, you can't get a surveyor out to the property. It's just not going to happen. I understand that. And it's much more difficult to get build costs, because builders shouldn't be going out to property to to give you a build, a specific build cost. You'll also need to put 10% deposit down on exchange as a matter of course, which is what the solicitors will ask you for. However, like I said in the previous slides, the seller is much more likely to negotiate right now. So the seller is going to be much more open to you saying, yeah, I'll put this offer down, but the offer is subject to a survey. It's subject to a build, the build costs coming in under a certain amount, and it's subject to me not putting down a full 10% deposit because I want to keep hold of that money for my cash flow or for spending on the survey. Now, again, that person who owns that property in a buyer's market is much more likely to say yes if you have a list of demands to go through your exchange with. And when you do exchange, obviously you are tied into that property unless one of the criteria that you've listed doesn't come off. And at that point, you can walk away from that property without any financial penalties. So what you should do, what you should be doing right now is exchanging, or is asking to exchange with a list of things that protects you if that property doesn't come off once you've got into it. But again, looking at it from the seller's point of view, they will have exchanged contracts with you, which means that they're much more likely to sell this property. So something that you should be taking into consideration is exchanging contracts subject to all of the things that will protect you if that property doesn't add up financially once you've got the right people in to have a look at it. So the minimum that I would be doing is subject to survey, subject to build costs, and without me leaving the full 10% deposit. Now, if you negotiate not giving the solicitor that 10% deposit, you are legally still responsible for that 10% deposit unless one of the factors that you've listed doesn't come off. So if the survey isn't what you were expecting, then you wouldn't be responsible for that 10% deposit. However, if you just want to pull out of the deal and the survey's been on a level that you were expecting, the bill costs have come in on the right level, but you still want to pull out, you would be responsible for that 10%. So make sure that that list of things that you're putting into that exchange covers you in situations where you need to pull away. So specific tip as well is agents have got more sellers than buyers right now. So make sure you register with as many as you possibly can. If you've got proof of funds and identification, then take them with you to show the agent that you're serious. Or, you know, obviously what you'd be doing right now is you'd be scanning them and you'd be sending them to the agent so that they can see that you're serious when you've made telephone contact with them. So here at Sourced, we give our franchisees our proof of funds, but obviously the ID would be yourself. If you have had an agreement in principle confirmed with a lender, then it might be an idea to give some details from that agreement in principle as well, just to show that you have, just to let them see that you have funds. So some of the things that we've been doing at Source specifically over the last couple of weeks, we give our franchisees our proof of funds because it's something that a lot of them fall down on. So we help them out there, and our lending. So we at Sourced have a peer-to-peer lending platform, and our lending is based on 70% of the GDV, and the cost of it is 1.25% per month, and those terms are exactly the same. So we haven't changed our lending criteria in any way. The loan-to-value rate is exactly the same, and the price for the lending is exactly the same. We're not changing any of our stuff for any of our franchisees. So 70% of the GDV. What do I mean by that? So if you're purchasing a property for £100,000, there's £30,000 worth of work, and the end value of that property, the GDV, gross development value, is £200,000. Then you can borrow £140,000. So that £140,000 is enough to cover the full purchase price and the works that go into that property. So what else we've been doing is we've been doing daily live videos in the exclusive Sourced Franchisees Facebook group. So we've created a Facebook group for our franchisees, and me, the franchise director, and Steve, the managing director, we've been doing videos to keep people updated with what's actually happening. You know, like Steve did a video yesterday. It was about a 10-minute video based on the 2 exchanges that we went through. and based on some of the questions that the franchisees are asking. So we've got a lot of stuff going on in order to help the franchisees. And what we're doing is we're reacting to any questions, to anything that they found in the market. Just earlier on WhatsApp, in our franchisees WhatsApp group, there were questions, again, questions about exchanging, questions about what solicitors are doing right now. Which, you know, great conversation between all of the franchisees. And like I say, constant updates on the WhatsApp group as well. So we can fund up to 100% of a profitable property investment. And that was through our sourced capital funding platform. And the key decisions in making, choosing what you should be doing right now, choosing your strategy that you should be focusing on right now, are based on these. This is a breakdown of like the personal situation, the financial situation, the markets, the market criteria, the lending criteria. But also you've got to look at your hunger for success, what your focus is, what knowledge you have, and what strategies you know about. So this is broken down into a little bit more detail. We've got it says here over 60 offices. We've actually got 70 now throughout the UK. So, you know, we've got lots of people out there right now trying to make their property businesses work, or shifting and pivoting their property businesses to react to the way that the criteria, the market criteria, and the general sort of feel of the property market is right now. So we get a lot of feedback on a daily basis. So we can see the results of this advice. We can see that people are, when they're pivoting their business, how it's affecting them and how quickly they're able to get hold of property and get hold of opportunity. So this was some feedback from Pete, who borrowed money from the Source peer-to-peer platform on that 70% GDV base. And for all of our franchisees, we create property leads and investor leads for them. Now, the property leads right now, you can probably manage to get hold of yourself. However, if you're looking to then sell them on, the investor leads, we've got over 130,000 investors registered on our platform right now. And all of our franchisees get to advertise their properties out to these 130,000 investors. Obviously, part of being a franchise is more than just sending them leads and sending them property leads and sending them investor leads. We also train them as well. So we've got a very intensive training platform, which covers all of these different courses. We also have support days in the north and the south, and they're every other month. That's where we get together a group of no more than 5 franchisees on any day, and every person in that room then gets to sit at the front, talk about their business, talk about how the challenges they're facing, talk about the things that they've done that have worked really well for them, and then everybody else in the room will help them try and build their business. You can actually download our training schedule. If you want a copy of it, you can email me, or you can go to this link right here. All of these slides will be sent to you, so you'll have access to them later. And you can download our schedule to have a look at it. And for our franchisees, you know, we've got those courses, but they can come on those courses as frequently as they like. All of those courses are over 2 days, and they can come on that 2-day course as many times as they want until they know that they've truly understood the depths and the intricacies of each one of those strategies. So we've got over 70 training days a year, comprehensive training, and it's all included within your franchise. So that's just a little look at 2020. Now, what we're doing, obviously, because of the current situation, let's just go up one. Where are we? So March, the next trading day is on the 8th and 9th of April, which is lease options and HMO. So what we're doing for that one is we're recording that one, and we're going to put that out as an online training course. And for the just underneath it, we've got support days in the north and support days in the south. And what we're going to do with those is we're going to run them as either telephone conferences between the 5 people that were booked onto them for that day, or we're going to do one-to-one training with them on the phone. So again, we're reacting to the market in the way that we need to. So this is all part of being in our franchise. You get an account manager, you get a deal review. So we'll assess your deals once you've had a look at them, once you've found them. You get monthly calls, optional one-to-one visits, bi-monthly support days, monthly training events. And then the cost for all of this is £12,500 plus VAT. You obviously become part of a big network. You get an exclusive territory. you've got the access to all of the training as many times as you want. You've got our property website and our CRM, and we've got a proven business model that we can help you out with. And the only other additional cost would be the license fee, which you pay monthly, and it includes all of these things. So you get all of the property leads, all the investor leads, email, phone, video support, national brand, bi-monthly support days, access to peer-to-peer. You've got the training events, you've got the SIN management if you want to do a network, hold a networking event. And if you were going to go that alone, the amount of leads that we produce for our franchisees is something, the cost of it would be something like this. So property leads cost about £50 each. Investor leads cost about £15 each on the open market, which equates to about £1,950. And for our source franchisees, it costs merely £200. Because we work on the basis that we make money when our franchisees make money. Now, this is a deal that's going through right now. This is currently it had its asbestos removed just the week before last, I believe. This is a commercial conversion. This is Chris's deal in Bournemouth. This is the first deal that he's ever done in property, and he's converting that building. It's not a great picture of that building, but it's very difficult to get a good picture of that building. It goes back quite a long way. It used to be offices, and he's converting that into 14 apartments. After he's converted it, he's going to refinance it, release all of his cash, and then he's going to look we're currently in negotiation with a tenant for taking that over a 25-year lease. GDV of that will be 2.2 million. Purchase price was 875, and his profit on that one deal is going to be in the region of £1 million. Now that's a big deal that we just looked at. Obviously, what we're talking about is looking after your cash flow as well, which is usually the focus of conversations with franchisees when they first start. This is something that Everton found. Everton's down in Barnet, just north of London, and he wanted to look after cash flow, and so he looked for serviced accommodation, and that generates him something like £800 per month for that serviced accommodation. So I've got to the end. I know this is a Q&A session, so what I'm going to do now is I'm going to go up to the top and I'm going to have a look at the questions, and I'm going to answer as many questions as I possibly can. So I'm going to just dismiss some of them. So I've got the current issue is tenant demand from Nana. Yeah, absolutely. It's very difficult to find tenants right now. With everybody on lockdown. Now, what I would say, if the current issue is tenant demand, a couple of years ago, a few years ago now, I had a rent-to-rent HMO business, which was based in quite a small market in Cheshire. The town wasn't a huge town, and so the market was quite small. And we went through a really tough winter. It was a very, very cold winter, and the tenant demand absolutely dropped off a cliff. And I managed to sustain my property business on 100% occupancy, purely based on the relationships that I'd built up when times were good. So over the previous couple of years in that marketplace, times were very good, and spare room was all you needed in order to get tenants. But during that time, I was one of the only HMO operators in the area who was going out to local businesses, who was networking through LinkedIn and contacting HR companies and saying, I can supply accommodation is the word I'm looking for. I can supply accommodation in this area for anybody that you're bringing into the area. And, I might not always be able to provide the accommodation myself. However, I will always give the person that you're bringing in the best advice and the most helpful support that I can in order to take that hassle away from you, Mr. or Mrs. HR person. How does that sound? And I actually got to be incorporated into companies' onboarding process. So when the contract was signed with an individual and they were emailed with their start date, I would be copied into that email, and the HR person would introduce me as the person to help them with their accommodation. Now, that took care of me in the bad time because I built that in the good time. And to be perfectly honest, if the current issue is tenant demand and you have properties in which you require tenants for, then there's not a great deal you can do about it now. What you should have been doing was something 6 months ago, something a year ago, in order to build that up. It's always about asking yourself the question, what else can you do? If you're looking at getting into property now, though, if you're looking at sustaining your property business, then I definitely wouldn't be looking for anything that I was going to buy and hold right now. I'd be looking for something that I was going to buy and flip, because that puts the demand, because there's just there's a huge unknown as to what is going to happen in the future, unless you've got something that you're going to flip and it's going to take 12 to 18 months in order to do that flip, like Chris Richardson, the slide that I just showed you, because after 12 or 18 months, we should have seen the back of this, and there should be some degree of normality that's restored to the property market. If anybody follows me on Facebook, please do just Google or go into Facebook and search for Chris Kirkwood. If anybody follows me on Facebook, then I posted a link to a report that was done by Savills yesterday, which was a really good long-term look at how this is going to affect the property market. So again, hook up with me on Facebook, go down through through the things that I've posted and find that report, because that gives a really good in-depth look at how the market should recover. And basically by Q3 of 2021, we'll be in a fairly similar position as we were in Q4 of 2019. So it should have returned to a good degree of normality. So I've got a question from Majid. How are franchise territories assigned? Can there be 2 franchisees in one territory as long as there is sufficient demand within those 40,000 households? How do you determine demographics to determine potential success for the franchise? So yeah, we get a lot of data from, we've got Sam, our franchise manager. He looks into the data of each one of the territories, and he'll give you some feedback on what he thinks is going to happen, what you should be focusing on in that kind of area. But also I will step in once you've come on training. I'll help you I'll help you determine on what you should focus on. Part of the training is that we have a goal setting document, which you can take advantage of, and it shows you the 1, 2, or 3 things that you should be focusing on from the very start. Because in property, what a lot of people neglect when they first start is cash flow. You've got to focus on cash flow to keep your business operating over a long period of time. So I hope that answers your question, Majid. I don't know about England, but it's cool. So I don't know about England, but in Scotland, the registrars is shut, no property transactions. How would you say? That's a question from Angela. Thank you very much, Angela. So Angela, is that they're shut down completely? Because there's a bit of contention about what solicitors are saying in England to people. So solicitors are saying that they shouldn't be operating, but it's not that they can't operate. It's that everything should shut down. Now, if the registrars is shut, then that surely means that the end of that transaction can't happen. However, the beginning part of that transaction can still operate. Is that right? If you can come back to me, Angela, and let me know, because the registrar is going to be the conversion of that, or the renaming of that property from one person into another. So Nana, yeah, okay, point taken. Thank you very much for that feedback, Nana. Appreciate it. When negotiating a deal on a property in the current climate, you mentioned about getting to exchange of contracts and negotiating more terms, as solicitors are probably closed. Doesn't this give you less leverage, as you won't be able to move forward? Solicitors aren't closed, Mr. or Mrs. Anonymous attendee. Solicitors are not closed. We exchanged on 2 properties yesterday. What they're saying is, I can't remember the name of the governing body over solicitors. However, they're suggesting to slow down property transactions. However, they've said, if all of the evidence and everything that you need is there, then you can still go ahead with that property transaction. So solicitors are not closed. If a solicitor is closed, then they've chosen to close, but they're not recommended to close right now, and property transactions are still going through. So that was... Let me just have a look at another couple of questions. If you've got any questions, then please go to the chat or the Q&A. It's labeled on my screen as Q&A, so just go up there. Just getting through a couple of images. As you collect your fees up front, why not give the franchisees some time to do their first deal before collecting the monthly subscription? Yeah, that's a good point, Peter. We used to do that. We used to do that when the fees were when the fees were higher. But you know, we've had people that have come on board that have secured money and looked after their cash flow in the first month. So again, using our expertise, using the things that we know and the evidence that we've got of people making cash flow very quickly, then there's just no need. And in fact, it gives people a bit more impetus to get done, and also to get to build their business in the right way. Because if we give people 6 months off the franchise fee at the very beginning, they'll focus on bigger deals. And 6 months is not a long period of time when you're focusing on bigger deals. You know, bigger deals can take years and years to go through. So from my point of view, I want people to build their business quickly, but also in the correct way. So build your cash flow first, then move on to bigger deals when your cash flow is taken care of. So that's why we don't do it, Peter, to be perfectly honest with you. Yeah, that's correct. This is feedback from Angela. Registrar is shut, solicitors are open and working from home. Okay, great. Okay, thanks for the feedback, Angela. I thought that was the case. So again, you can get the property through, you can go through exchange, and then obviously what you're going to have to do is you're going to have to set a long period of time between exchange and completion in order to, because you have no idea when the registrar is open again. Do you have 1 year's mentoring program? Are we allowed to pay monthly? So you'd be paying. This is a question from Kashid. So yeah, the franchise fee is payable up front before you have access to all of the benefits of being part of Sourced, and then there is a monthly fee of £200 per month, in which you're getting well over £2,000 worth of leads, information, advice, access to training, and all of that kind of stuff. But the franchise fee would be payable up front. Kashid, I hope that answers your question. Anonymous attendee, that as rent to rent SA has been one of the best cash flowing strategies over the past few years, would you advise against this strategy in the short term with what is going on as the accommodation sector has been so affected? Well, it's taken, I think I've got one more question left out of 20 that were thrown at me, and I'm surprised it took to this point to talk about serviced accommodation. Obviously, serviced accommodation is going through a very, very tough time at the minute. And I was giving this some thought just a couple of days ago. If I personally, I don't have any serviced accommodation. However, if I did, what would I be doing with that serviced accommodation right now? Well, the first thing I'd be doing with that serviced accommodation right now is if you're renting it, so if you're doing it as a rent to rent serviced accommodation, I'd be talking to the landlord and trying to get some 3 months off the rent. If it's on a mortgage, then I'd be talking to the mortgage company and trying to get the 3 months off the mortgage in order to reduce your outgoings. The next thing I would be doing is I'd be looking at the 2 business sectors that are currently mobilizing people, and they are NHS and retailers, food retailers. So I'd be looking at those two markets and making contact with people in the NHS. The NHS are calling out for volunteers. They're calling out for people to come and help them. And if you are close to an NHS centre, your serviced accommodation could potentially be used as accommodation for the people that are there to keep these NHS centres going. Likewise, for the food distributors, Tesco announced that they were going to employ another 20,000 people throughout the coronavirus crisis in order to help their supply chains. So, you think about, you've got Tesco, Asda. I'm not going to go through all of the retailers, but you know who they are. I'd be looking if there's anything like that nearby, and I'd be contacting those companies to see if they need any accommodation. Because realistically, what else can you do? It's always a case of thinking about the situation that you're in, not going through that panic stage in your head, which just fogs your head up so that you can't think clearly. Take a step back from the situation, think about it logically, think about what you can do, what is happening out there, what positive steps can you make forward. And that's what I'd be doing with serviced accommodation. But certainly in the short term, if you can commit somebody to giving you some serviced accommodation, like rent to rent serviced accommodation, but deferring that to start till, August, September, October, when this should all be calming down, then that's definitely but also giving yourself some leeway, because obviously when you're signing contracts, what you want to do is you want to give yourself an out, look after your downside first. So if you can get access to serviced accommodation without fully committing to it, then that'd be the thing that I'd be doing. For instance, a lease option deal. Getting an option contract where you can walk away from it without any kind of financial penalty, that would be exactly what I'd be doing right now. So Anonymous, I hope that answers your question. Let's just have a look. So to clarify, 200 is the ongoing royalty that has to be paid to source. Majid, yes, that's correct. £200 per month. Yeah, exactly. So it's only £200, and we give you access to 130,000 investors. We give you all the property leads that we send through to your CRM. It's 35,000 leads a year. And obviously we give you our access to the training, which there's no additional cost for the training. You get the training. And like I said, you can come onto the training as frequently as you like. Okay, so I learned some people who invested in peer-to-peer lending are having a run at the company now, fearing what could happen. How solid is your peer-to-peer platform? Some peer-to-peer lenders have hit trouble, not anything to do with the current market situation. This was in 2019. Some peer-to-peer lenders went into trouble. I'm not going to go into the reasons that they went into trouble. However, the Source peer-to-peer platform is not has not opened itself up to the same things that those other lenders did. We've got 100% repayment rate. We've got a very strong loan to value. The Savills report that I read yesterday suggested that the property market would probably go down throughout this crisis by a region of 5 to 10%. And we've got a 70% loan to value. And so we've got more than enough margin in there to make sure that if at any point we needed to take that property back, if that property deal fell through, we could sell it for a decent discount and still get back all of the money in which to pay back the investors and pay back their interest. So I've got absolutely no concerns about that at all, Peter. What is the most effective strategy in the present market? Good question from Kashid. It completely depends on you. It completely depends on your situation. And it completely depends on what you're trying to achieve over the long term. If you and I sat down, and it would take us a period of like 3 or 4 hours, if we sat down and we talked about not only the market, but your situation and what you want to achieve. And in order to really understand what you want to achieve, would have to go through a proper goal setting review of where you're trying to get to and what's your purpose of investing in property. You know, if we went through all of that, then I'd be able to answer that question more effectively. But certainly from a general overview, I'd be looking at flipping stuff at the moment. That's going to take, you know, you're going to get a good deal right now. So if you can get a good deal right now when the market is slightly depressed, the ideal place for you to sell it is when the market is rebounding. So if you can get a good deal right now, that in 12 or 18 months, that project's going to be ready and open onto the retail market, that's exactly what I'd be looking at right now. Is there a limit on how much you can lend to your franchisees, assuming one wants to rely on keeping the property to sell in 18 months, as you suggested? Is there a current limit? It depends on the structure of the deal. So we assess each deal on its own merits. So what we'd do is you'd send that deal across to me, first of all, to assess in the CRM system. And if it was appropriate to be put through to the peer-to-peer platform, I would assess that deal. I'd go back to you. I'd tell you all the things you need to get in order. And then once you've loaded them into the CRM system, I'd pass that deal on to capital for the capital guys to go through it with you and to assess. So that's how we'd do it. It depends from one deal to the next on the actual structure of, you know, whether you're using drawdown, whether you're paying at the end. You know, there's lots of different factors that we need to go take into consideration. Is there also a percentage of profit to be paid? Not in your first year, Nana. So in the first year, all you have to pay is the £200 per month. And then from year 2 onwards, it will be 5% of your profit from each deal that you do. So not 5% of your turnover, it's just 5% of your profit. So if you do, you know, if you do £1 million deal and your profit is £100,000, out of that £100,000 profit that goes into your pocket, you would then owe us £5,000. So yes, there is, but it's based on profit, which is a big distinction. It's not based on your turnover, which a lot of other companies do. How active are your investors right now? Well, thank you very much, Sasha, for the question. We've had a few investors who have confirmed property deals that they want to buy last week. As yet, we haven't sold anything this week. Again, just being completely transparent with you, I've got nothing to hide whatsoever. We've got no transactions that have been confirmed this week, but we had 2, I think 3 off the top of my head. We had 3 confirmed last week. So there is still stuff going on. There are fewer investors out there. I have no doubt about that whatsoever, because we're in a buyer's market. So there are fewer investors than there are sellers out there. There are loads of sellers. So if you're an investor yourself, Sasha, now is the time for you to get out there and get yourself hold of a really good investment. How do you encourage your franchisees to find deals? What methods do the most successful franchisees use to find deals? Also, if we are not a franchisee, can we offer deals for sale and do some sort of profit split? Does the company or the individual join? Good question, James. Let's get to that last bit first, because that's an easier question to answer. The company or the individual can join. We've got some people that have joined through a limited company. We've got some people that have joined individually. If you're not a franchisee, then I'm afraid we can't let you advertise through our platform. That's exclusive only to franchisees, as is our peer-to-peer platform. So if you want access to our lending based on 70% of the GDV, you would need to be a franchisee in order to get hold of that. So again, James, this is a big one. Which areas are most densely covered, and are there any in which you have gaps? I'm in North East London. Funnily enough, North East London. We've got quite a few people in sort of South London, James, to be perfectly honest with you. But the north of London, we don't have a massive presence in the north of London. So it might be good for us to have a chat. Can the joining fee be paid over time? The joining fee needs to be paid before you sign up. If we have deals which we can't get moving, what process can we follow to do something with it? Do you mean deals that you have right now, or deals that you would have signed up when you've been part of Sourced? Because if you've got something that you haven't, that isn't going right now, then you're in a tough market right now. If you've got a deal that you want to sell right now, you're in a tough market. What can you do though to get it out there? You know what? I'd be concentrating on getting out and building your network and getting as many people to see that deal as possible. So if you haven't got a good presence on Facebook or LinkedIn, then it's time to build it. If you're serious about building your property business, then you need to have a good presence on Facebook and LinkedIn, because it's only going to serve you in the long run. So that's what I'd be doing. I'd be getting it out onto as many groups as possible on Facebook, as well as advertising it with agents, as well as looking for where investors are. You know, where are the investors right now who are looking for deals? And it might be a case that that because there's such competition with the properties, it might be a case that you need to lower your prices or lower your expectation right now. If you can hold on to it and wait for the market to bounce back, then you'll obviously get more money. However, you need to take into consideration mortgage payments, rent payments, or whatever, in order to make sure that that's a sensible solution for you. Is the deal analysis a service you sell to customers? I'm afraid it isn't. I'm thinking about offering this as a service in the near future, as I'm into spreadsheets and finance. Yeah, I love a spreadsheet, James. I absolutely love a spreadsheet. It's not a service that we offer to customers. It's only for our franchisees. On average, I'm getting to assess about 35 deals a week at the moment. And they go in a number of different directions. You know, some of them go through to capital, some of them go through for selling, and some of them get knocked back to the franchisee because they haven't quite done the maths correctly, or they haven't got evidence that they need to, or it's been more expensive. Proper quality feedback is offered to the franchisee for them to make the most out of that opportunity. And that's covered again. Okay. How much is the APR on your typical 70% LTV? Well, if you are taking advantage of the full 70% of the GDV, then it would be 1.25% per month, Peter. So depending on how many months you need it, that's how that would be calculated. James, sorry, I tend to ask a lot of questions. Absolutely no bother at all, James. That's absolutely fine. It is a deal that you've got now. Okay, so hopefully that helps. I'd be getting social media. If you're not on social media, then hammer the living daylights out of social media. You've got to. All you're doing is you're building your digital network as well as your sort of face-to-face network. And as one of them, and all you're trying to do is get your deal in front of as many investors as you possibly can. And social media is a great tool for that. You know, right now a lot of people are trying to make themselves feel better by watching silly videos on Facebook and on social media. So there's a lot of activity on social. For example, we saw our website traffic go up by 153% last week just generated from social media. So there's lots of people spending a lot more time on social media, James. So get your profile on social media up there, get into as many property groups as you can, especially where the investors are hanging out, and get your deal in front of them. Seki, I hope I pronounced your name correctly. I've noticed most of your franchisees are based in England. Do you cover up to Scotland, and what are the prospects in this area? I live in Scotland. Yeah, sure, of course we do. Yeah, we've got Nikki in Ayrshire, and we've got Simon and Phil in Glasgow. And Phil actually is he's got a property which we raised money for on the peer-to-peer platform just a couple of months ago. So we've got a lot of activity in Scotland around those areas. So Seki, by all means, get in touch with us. Send an email to the email address that's on the screen. I'm going to move this just in case it's in your way. franchise@source.co. Get in touch with us. You'll get put through to Sam, and perhaps we can have a conversation with you there. James, back to James. Will do. I've been working on it this month. Great, James. And look, you know, building your social media profile over a couple of months is never going to, you know, get you to the heights of where you need to be. However, great start. Well done. Keep it going. I think in the first year of me concentrating on Facebook, I took it from 285 people to something like 3,700 just by going into groups, you know, making a name for myself, trying to help out people wherever I can. So if you can do that, and you know you're listing something that you've actually got, you're listing a property that is actually out there and available to people. You're not a newbie. You know, you're distinguishing yourself from people who are just starting out. So that's great. That's great for you. Keep on going with it, James. And James Maloney, best cash flowing strategy short term right now. Again, James Maloney, this depends completely on your own situation and your own circumstance. For us, so there were 5. Let's see if I can remember all 5 off the top of my head. You've got rent-to-rent HMO, rent-to-rent serviced accommodation. Serviced accommodation I wouldn't look at the moment. For our franchisees, they can earn 8% if they sell one of our flats. So we've got a development of £150 million, over 500 flats in Manchester. If they sell one of those flats, they'll get 8% commission, which works out to be about £16,000. If our franchisees recommend somebody to the peer-to-peer platform and they invest, our franchisees make 5% commission for that. So if you've got a friend that's got a pension of £100,000 and they put that money into the pension, they'll get a £5,000 commission for the franchisees. We've got one franchisee who made £9,000 from doing that in January. And then you've got lease option deals, which is, you know, basically flipping property but doing it with lease options. If I was starting out right now, I'd be looking at securing property that people need to get rid of on a lease option, and then looking at ways of making money from that property over the short term and then selling it in 12 to 18 months. That's what I would be doing given my situation. I can't talk about your situation, James, because I don't know anything about it. But certainly from looking after your downside, the amount of money that it takes, and the potential upside, that's, I think, where a lot of opportunity is right now. So obviously with the lease option, or ideally it wouldn't be a lease option, it would be just an option agreement. I can take control of a property and I can exit from that property without any financial penalty whatsoever. However, if I do want to buy it, or if I do want to sell it on, I can do that when the market responds, when the market bounces back. Okay, so thanks for your transparency. You've given a lot of great inspiration. Thank you very much, Nana. That's lovely feedback. I appreciate that very, very much. Okay, so onto the chat. Let's see if I can see some more questions in here. No. A lot of no's from the beginning. Obviously, what I'm going to do is I'm going to put these slides up. These slides will be sent to you. You'll be able to see the couple of slides that maybe you didn't see right at the very beginning. It was just sort of setting the scene though. So it's none of the like the main content, because by the time the content happened right in the middle, you were already part of the webinar by then. Yeah, going back to. Hi, Chris, it's your favorite franchisee. Hello, Sarah, how are you? Not necessarily want to put a deal into market out to investors today. Chris and the team are so supportive. Oh, brilliant. Okay. So yeah, looking at activity in the market, Sarah, one of our franchisees from York, has put a deal out to be sent to the 130,000 investors just today. So people are securing deals. The market still goes on. So that's great activity, and thanks for letting me know, Sarah. Appreciate that. Sorry it took so long to read your message. Some deals coming to the market at the end of the current situation is uncertain. What's your advice on purchasing right now or next 2 or 3 months if we potentially can't start reverbs? You're going to struggle. A good question from Glenn. Thanks very much. You're going to struggle to go through the full purchasing process. So let me just read your question out for everybody else. There are and will be some good deals coming to the market as the end of the current situation is uncertain. What's your advice for purchasing right now or the next 2 or 3 months if we potentially can't start refurbs, etc.? If you're purchasing, you're not even going to get to the end of the purchase, Glenn, because you can't get a surveyor out to come and have a look at the property. You can still go through the conveyancing process with a solicitor because solicitors can work from home. However, it's getting people to go and do things that is the issue. And I don't know about you, but in my local town of Knutsford, there's a roadblock, or there has been a roadblock, and police are stopping people and asking whether what they're doing is necessary. And if they deem it as unnecessary, then they're sending people home. And I would say that a surveyor going out to have a look at a property isn't necessary. It's not part of the, the critical jobs that the government has listed. So I think what you'll have to do is you'll have to secure that property, as I mentioned in the webinar, with an exchange, but subject to the survey and subject to the build costs. And then all you can do is get ready for the time when those people can go out and get that property secure to you so nobody else has access to it, so that when it all turns around and you can go and look at the property, if it makes sense, then you want to take it, then you're the first in the queue. You're the person that secured that property. So that's exactly what I'd be doing right now, Glenn. So we've got that one. What is your policy if you find a property in another franchisee's territory? That's a great question, Darren. So what we encourage our franchisees to do is to talk to each other. If I'm a franchisee and you're a franchisee, Darren, and I'm in a neighbouring area of yours, and I say, look, I found this in your area. It was from a marketing campaign where they forwarded me to their friend who just so happens to be in your area. How's about this? How's about I take this property from you? If you find a property in my area, I'll reciprocate and there'll be no money changes hands and all is fair. How does that sound? And that's the way that most of the franchisees operate, and that's exactly the deal that they've come up with in 99% of the cases. Because the franchisee who has the property in their area, they haven't actually contributed anything to that deal going ahead, other than having, they own the area. Now, if that franchisee who owns that area finds the investor, then I would recommend a 50-50 split in all fees at that point. So that's what I would do in that situation. And that's what we recommend on our franchisees to do. Do you have any territories in Essex available? Yes, Glenn, of course we do. Again, franchise@source.co. If you send us an email, we'll investigate that a little bit more for you. And if you could tell us what specific area of Essex you're looking at, then that would be fantastic. Let's have a look. Anybody got their hands up? No, can't see anything there from the Q&A. Let's just have a look at the Q&A. What size is the franchise area? Thank you very much for your question, Oliver. It's 40,000 households. So for one person, that might just be one postcode, and we work on postcode areas. So we'll look at the postcode database. We will look on postcode district. So it's like, for me, it would be WA16. We don't worry about the last three digits. It's just the first part of the postcode. So for me, that's WA16. And we look at that, and we fit as many of those postcode areas into your franchise as we can, up to the limit of 40,000 households. So that's how we determine the franchise area, Oliver. So any other questions? Anything else that I can answer while I'm here? I still see we've got like something like 30 people on this at the moment. How much does it cost to purchase another area if you already have a franchise area? That's a great question, Darren. You've obviously looked at this in some detail, Darren. It's half the cost of the original franchise. That's how much the second area is to purchase. So if you purchase one for 12,500, the second, and then third, fourth, fifth, sixth, however many more you want to purchase, will be half the cost of the original franchise. Hope that answers your question. Anything else before I go? What is involved in prepping a deal pack? What is involved in prepping a deal pack? What do you mean deal pack, James? Could you just quickly describe that for me? Do you mean when we're preparing a deal in order to go out to the investor? Is that what you mean by deal pack? If you just quickly type that. Yeah, what you're selling. Okay, great. You're a dynamite on the keyboard, James, aren't you? So what we're selling, yeah. So if you're prepping a deal, what you do is you put it into the CRM system, and we've got 2 pages in our CRM system that you need to fill out in order for us to then put that deal out to the investor database. The first page is sort of the nuts and bolts of the deal. So some basic location information, some financial information, if there's any planning, that kind of information, and that's pretty much it. But then on the second page, it's all about the marketing. So we're looking at the benefits of buying that deal. Now, what a lot of people do, and we were talking about Facebook earlier, weren't we, James? What a lot of people do is they look at Rightmove all the time, and so into their head gets penetrated with estate agent language. And on Rightmove, an estate agent is writing something to speak to a retail buyer. Whereas us going out to our investor database, what we're talking about is we're talking about an opportunity. And so the marketing needs to be written in the form of an opportunity. What are the benefits of buying that deal financially, and as part of a portfolio? What does that deal bring to the table? So there's a whole page of things that you can talk about. You can talk about the property itself. You can talk about the location. You can talk about the plan that you have for the property, because you're selling the opportunity to take a property and say convert it into flats. And so the plan for that needs to be written out so that the investor looks at it, reads it through, thinks, I see your due diligence. I see what you've done. I can see that you've got this plan worked out and you've got supporting evidence. This sounds like a very, very good deal. And it's a deal that stands apart from everything else that's in the marketplace, because there are millions of deals that are offered by sort of generic property sources that are not well documented. The due diligence has not been done very well. And so they make it onto Facebook and they look an absolute mess. And you ask them questions about it and they've got no idea what's going on, because they're just trying to sell stuff to anybody. That's not the way for me. And the recommendations for our franchisees, we're always looking at lifetime value. I don't want you to buy 1 deal from me. I want you to buy 30 deals from me. And I want to help you buy 30 deals from me. And so what I'm going to do is I'm going to help you understand this deal. I'm going to give you all the information because I know this deal works. And then I'm going to market it as an opportunity rather than marketing it as just as a property that's on Rightmove. If you're looking about deal packs though, James, I did a webinar a while ago, which was how to present a property deal. And I think that's on our YouTube channel. So if you head over to YouTube and then you type in sourced, subscribe to our YouTube channel, and you get all of our videos and all of our webinars. Needless to say that this webinar will be on there at some point in the coming days. But you can go back through all of the content that we've put on there, and you've got access to all of it. So I'm sure I've got one on how to package a deal, I think is what it's called. So why don't you head over to YouTube, James, and have a look at that. Can someone become a franchise? This is a question from Peter. Can someone become a franchisee without being tied down to an area, especially for someone who hasn't got time to run conferences? I don't really understand what you mean by especially for someone who hasn't got the time to run conferences, Peter. If you could explain that, that would be great. The franchise would be location specific, but you raise a very good point. You're not tied down to only that area. So if you've got an area which is associated to your franchise, you can operate wherever you want to, so long as another franchisee isn't already there. So wherever we haven't got franchisees that area is open for anybody to operate in, include anyone. So you can go and do that. If you can explain what you mean by run conferences, I'd appreciate it, Peter. Thank you. Sometimes an opportunity. So this is back to James. So you said that sometimes an opportunity needs some processing to maximize its value, like gaining planning, for instance. How can a franchisee recover costs and time put into a deal if this is carried out, like getting drawings and planning? Yeah, good question. If you're going to sell a deal on, if you're looking solely at sourcing a deal on, James, I wouldn't recommend just trading it. I think if you're going to put some money, because you would have to put the money in up front, I would look at perhaps doing that deal yourself. And I think the risk of putting money into planning needs, on the other side of that seesaw, it needs the reward of a big lump sum if you're going to take that risk. And just by trading it on, I wouldn't advise that anybody does that. If you are going to put some money into planning, then I would want to see a big reward coming back to you in the end. So I'd look at, instead of trading that on, I'd look at doing that deal for yourself instead. And so that's where you would go to the second part of your question. That's where you'd recover your cost from a much larger amount of profit that you're making. If you're looking at, standard sourcing fee in the market is 2%. So if you're looking at getting planning on something in which to make a 2% sourcing fee, I think you're going to struggle with that and struggle to make that equation balance quite so much. But if you can see that it's genuinely a good opportunity, then, as being part of the Source franchise network, I would recommend that you do that deal yourself. How do you know if there's already a franchise in your chosen area? Good question, Sasha. You would contact us. So again, going back to the web email address, franchise@source.co. Just ask us the question. You can ask me. I'll be able to find out for you in 5 minutes. So do that, Sasha, and I'll let you know. Any other questions before I head off? My plan. Oh, thank you very much for getting back to me, Peter. My plan is just to find the right property anywhere, do it up and flip, or keep for some time before selling. Okay. Okay. Peter, thanks very much, Peter. Now, if you're gonna find a property and do it up, it is obviously within your in your interest to operate that property close to you. Now, I can hear out of the people that are still on this webinar, I can hear there's some people going, hold on a minute, I'm in London and I can't afford a property in London. I need to go to Bradford to buy a property in order to do it up. That's a very common misconception, that people think that a property or their ability to buy a property is based on the value that the property is on the market for. That is a complete misconception. The reality is, if that property has margin in it, you can buy that property for very little of your own money. Whether you're in London, whether you're in Brighton, whether you're in Bristol, whether you're up north, whether you're in Bradford. For some reason, I've picked everywhere beginning with a B there. I don't know how that happened. Whether you're in Birmingham, I'm not going to carry on. But yeah, it's a common misconception that you can only buy stuff that's cheap if you don't have a huge deposit. For instance, peer-to-peer finance lends you 70% of the GDV, which can be 100% of the purchase price and the works. So if you're running a project, I would much prefer you to be close to that project in order to keep an ay on it and make sure that project is going exactly as you want, exactly how you want it to go. So I would very strongly recommend that you're somewhere close to the area in which you want to operate. So again, going back to my previous answer, you don't have to only look for properties in your territory. You can look for properties outside of your territory. And if there's no other franchisee there, there's nobody else that you need to run that by. So I would look at that, Peter. Another one from Majid. Chris, quick question about development finance. Do you have to have additional security to put down to obtain the finance? It completely depends on the development and what you're borrowing, Majid. If your loan to value doesn't come in strongly enough, then yes, you might need to put down additional security. However, if you've got a very strong loan to value, then you wouldn't need to. So it completely depends on the numbers. As with all property, right? All property depends on the numbers. So this is no different whatsoever. Sasha, great webinar. Thank you. Very kind of you, Sasha. Thank you very much for your feedback. I've emailed to ask which postcodes. Excellent. I'll have a look at that have a look for that straight away, Nana. And let's have a look at the top. Just go back to the chat. Glenn, I have some properties in the northeast but live in Essex. How would the franchise work if I wanted to continue investing up north? So you can take a franchise up north if you wanted to. I bet that the reason that you're looking for those properties is you're building a because the yield in the northeast is really strong in comparison to Essex. And so Glenn, probably your property strategy at the minute is to buy as many of these as possible and use them as some kind of long-term income, some kind of pension plan. Now, obviously the trade-off that you've got in the northeast is that the capital growth in the northeast is pretty poor. And I feel confident saying that because I was actually born in the northeast. I come from Sunderland originally, and my gran still lives up there. So we go back to the northeast quite a lot. But yeah, you're probably investing for the yield in the northeast. Now, what I would do with you, Glenn, is I would look at your entire plan of how you're going to make money and how much money you've got. And then we would come up with a plan of how you can make more money based more locally to you. Because the more local it is to you, the less your risk. And in a lot of property and a lot of stuff that I do, I think I see myself as a risk management advisor in property. So we'd have a look at your entire plan. And if your plan is to purchase, 10 properties in the next 5 years, and each one of those properties is going to cost you £50,000, then that's £500,000 worth of property that you'll get in the next 5 years. But what we'd do between you and I is we'd work out how you can make an equal or surpass that amount of money in the next 2 years based in your area. And it's 100% achievable. As you saw on the slides, right? Chris Richardson, Bournemouth, first deal, borrowed all the money he needed for it. He's going to make the profit margin in that deal is around £1 million. So that's one deal. It's going to take 18 months to come off, which sits within my 2-year sort of time limit for you. But you could certainly do something very similar to that in your area. And, it's about taking that step back, and it's about looking at it logically. I hope that answers your question, Glenn. And Darren, I may have missed this part, but could you explain the benefit of source capital to franchisees? Yeah, this webinar wasn't really about source capital, but yes, 100%, of course I can. Source capital, so our money lending is only available to franchisees. And as I explained in the webinar, a lot of bridging companies and mortgage companies have made their lending more stringent or harder to access. Source capital has not. For the franchisees, we charge exactly the same amount of money as we did before this coronavirus crisis. And we can fund 70% of the GDV. So the example that I used in the webinar was, if you purchase a property for £100,000, the works cost £30,000, and that property goes up, lifts its capital value to £200,000. So source capital will lend you 70% of that £200,000, which is £140,000, and that covers all of the purchase price and all of the building cost. So you don't have to contribute the purchase price or the building cost into you owning that property. So that's the overview of the benefits of source capital. There's a lot of security, there's a lot of background, there's a lot more stuff that we can go into in source capital, but I don't want to go into it here. Head over to the website, Darren, and have a look at it if you want. If you've got any questions, then please feel free to ask me. Peter, is there any rebate or payment holiday within the renovation period of the property? Is there any rebate or payment holiday within the renovation period of the property? Do you mean you're gonna have to explain that in a little bit more detail. Are you talking about from source capital? Are you talking about from general mortgages, Peter? That would be much appreciated if you could just clarify that a little bit. And any other questions? Oh, there's one more. Is that one? Any other questions from anybody anywhere? Happy to stay on here as long as the questions keep coming, to be honest. It's nice to talk to people outside of my immediate family at the moment. Got you, thanks. Yeah, no problem, Darren. Happy to help. How is everyone dealing? We've been a week into this sort of working from home at the moment, and how are you all getting on? Are you enjoying working from home? From my point of view, I save an hour a day, and so I've put that hour a day into 3 different things. So I'm doing more exercise, I'm learning a language, or I'm becoming better at French, because I already sort of speak French, but I'm getting a bit better at it, and I'm also getting a bit better at playing the guitar as well, and all through apps, all through stuff that I've downloaded from apps. So that's how I'm using that extra hour a day that I get when I'm not working. I hope you're all doing something equally as constructive. Okay, well, I'm not got any more questions that are coming up now. So what I'm going to do is I'm just going to hop off the webinar. Thanks very much for joining me. Really appreciate it. You've got the franchise email down there. My email address is chris.kirkwood@source.co. So you can send me a direct email as well. But if we're all done at that point, I will sign off, and it's been great to talk to you. Majid, just one quick thing. Thinking about creative ways of slaying the wife was what a lovely message to end on, Majid. Thank you very much for that. I appreciate it. All right, and thanks very much. See you soon. Thanks a lot, guys.